hope you're doing well. In today's video, we'll continue with our series of using price action to analyze index and then eventually to analyze stocks. In today's video, the index that I have in front of us for assessment is that of the Nifty Metal Index. It has a lot of key components which we can find out if we simply go to the NSE India site and list out the metal index on that website. You'll have all the subcomponents of this index coming up. So which means that whenever we make an assessment at the index level, it gives us a fair idea of what to expect when we look at the components of the index level and helps us sort out which ones are stronger and which ones are weaker than the index. So coming back to the index at hand, analyzing stocks obviously is the next step. When we look at this index, it is without ambiguity that we see that since 2020 this has been in an uptrend, and in the last year we have seen a pullback creating a higher bottom. This is clearly a higher bottom as it is above the previous pivotal low. So the extent of the pullback obviously is quite sharp because we have seen it pull back from almost 10,000 levels to 7,500 levels, which is a near 30% correction on the index. So when there is a deep pullback, the temptation is to call it a weak trend, and the trend, of course, the strength becomes weak, but the question is it bullish or bearish? And obviously here the answer is bullish because it is pulling off from a higher top. So it's a bullish weak trend index, and because it is a bullish trend, although it is weak, the directional bias will continue to remain on the long side. Once we have assessed the directional bias on the long side, we move a time frame lower to make an assessment on the weekly charts. And in the weekly charts, once again we see the formation of this shoulder followed up by a head and the potential of another shoulder is being made right here. So to get a idea, it's not the most perfect inverted head and shoulder, but the structure that I have in mind is looking like this, right? So now it looks closer to the inverted head and shoulder pattern, but like I said that there is certain flexibility here or discretion that I have used. In other words, I have not connected this low with this high. So I have directly cut through those highs and connected it with this one, and because there is this discretion, some traders might find it as an inverted head and shoulder, some traders might not. So we will leave it at that. Of course, means I always maintain that if it is difficult to see, then it perhaps doesn't exist. And so I will just leave the assessment on the weekly and continue with the directional bias on the what I have from the daily to from the monthly to see what I can identify on the daily charts. Once I come to the daily charts, obviously I will monitor the price action more closely because I have already factored the historic trends. And here, as usual, I will just connect the highs and see if something is forming. And after connecting the highs, I will connect the recent lows to see if something is forming. And when we create this, we get obviously a triangle, and a triangle in which the high is obviously at around 9,800 approximately, and the low is approximately at 9,000. So there is a roughly 750 to 800 point target whenever there is a breakout, and the breakout is obviously right here. I'll just mark it so I'll just color this maybe orange and make it a little dark. So obviously the breakout has happened at approximately 9450 levels. I will add 750 points to it and give it a target of close to 10,100 levels, somewhere around here. I'll mark this with the green because this is the target. And obviously this black line here that we have created connecting the lows is going to continuously remain as the stop loss of this trade. So the breakout is confirmed, we will remove this, and this trend line is basically the stop loss for this particular trade. And here obviously if there is indeed a weekly inverted head and shoulders, if at all there is indeed a weekly head and shoulders, then in that case that would be formed because we would have connected this. In such a case, we are connecting the highs of 10,200 with the lows of approximately 7,700. So there is close to 2,500 target upon the break of this, which will happen at around 9800 levels. So obviously a 2,500 target will take it to 12,500, and since it has taken a full year to form it, it'll give it a 6 months time frame. So yes, with this hopefully we have learned a few things, that we are seeing multiple indexes form an inverted head and shoulder pattern, or some kind of a bullish reversal pattern on the weekly. That's largely got to do the fact that multiple indexes are structurally bullish and they have been corrected since the last 1 year. So we are seeing close to 30 to 50 candles in which the price has not gone anywhere, and now that we connect the highs and the lows, we tend to see a pattern on some time frame or the other, encouraging us to trade in the direction of the structural bias. And since we have assessed Nifty Pharma, Auto, IT, etc., FMCG even, the general view could be that are we always going to be long? And to that I would just say, for example, select index which is obviously not long. I mean, this is the all-time high right here. The all-time high is at approximately 3600, the current price is at approximately 1600, and pretty much the low of this index in 2012, which was touched in 2020, is approximately 1100. So this is in a very very big range, and this is the Nifty Media Index, and is one of the indexes which must be most impacted by YouTube and other social media platforms, because advertising money shifted in that direction quite a bit, and therefore stocks listed in the segment took quite a bit of a hit, and consequently this would be one of those segments where I wouldn't mind shorting. And if we actually go but I'll also share, if we actually go to the NSE site and select for all the media stocks, you will see that with the exception of maybe Sun TV, I'm not too sure if PVR Inox is there, but almost all the stocks do not have a future in it. So there are 10 stocks listed in this, and maybe 8 of them don't have a future of this listed. Consequently, even if we do analyze this, we will analyze this on both the long and the short side, but we will not be able to take the short trade because you don't have futures for it. And in general, the way the mechanism is structured in such a way that only bullish trending stocks tend to be in the future segment, or stocks which are bullish but are in a deep range. For example, something like a UPL, or some stocks like that which have got into a deep range, but they'll still have a bullish undertone to it. But clearly bearish segments or bearish stocks, their futures tend to get eliminated, and therefore we don't find too many opportunities using this technique in order to short the stocks. And also because the historic trend has been on the upside, so therefore we this method is continuously sending us on the upside, because we are using the monthly time frames to make an assessment. But the point being that if we are decided on a direction that is long only direction, then using this assessment we can eliminate weaker indexes and segments that we don't want to go long in, and only stick to the stronger segments relative to the market in order to take a long position. So in today's video, we assessed both the media and the metal index to have a clear comparative that we have seen the media as it is, and we are seeing the metal. They are two different images, and therefore they warrant two different trades techniques. And in a structure which looks like this, we are just looking for justifications to go long, and one of the justifications, for example, could be a range break on the daily charts, with the previous low being the stop loss, using classic price action techniques in order to trade with a reasonable bias in the market. So with that, I hope we all have learned a few things. Thank you for your time. I'll see you next time.